Welcome to RANsquawk CU morning briefing for Friday the 18th of December of 2009. Taking a quick recap of what we've seen so far, volumes across the board have been very thin this morning, again being a Friday and given the holiday time of year coming into the close of 2009, and also as well with the first snowfall in London this year, a lot of participants haven't been able to get into their desks. That has led to a bit of exacerbation in a lot of the moves today. We've seen gilt futures taking a bit of a spike as some stops are triggered. We are outperforming there, but again just technically driven rather than anything on the news fronts. In terms of actual economic data out of the UK, we had the latest in public finance numbers, which did come out slightly better than expected. However, mortgage approvals were slightly lower. But again, as mentioned, technically driven, gilts are trading higher. Whereas in Germany, Bund futures, they are trading broadly unchanged to slightly higher. We had the latest in the German IFO report, which was pretty much in line with consensus, with the IFO economists saying they don't expect ECB to raise rates next year. But again, the reaction in terms of the euro and Bund is pretty unchanged. Elsewhere, in terms of some of the other things that we have seen, equities are trading higher today. The likes of FTSE, CAC and DAX all up around the % margin. Added volatility as well, given the December future and options expiries across the board. We did see the future taking a little pop in the expiration of that debt contract earlier this morning. And we're looking forward to the others as we proceed through the morning. Elsewhere, on a sector basis, technology outperforms. That's following the much better than expected earnings results we had from Research in Motion, who shot up 10% after the market closed yesterday. And Oracle also shot up 4% after their forecast beating numbers. The DAX seeing a bit of outperformance there as well. The likes of SAP and Infineon getting the benefit of the doubt there on their terms of their outlook for next year. In terms of financials, though, they have put a slight cap on proceedings. The financial on a sector basis is the only sector in the red. Some of the continued fallout of the latest Basel regulatory capital rulings, as well as some comments by Fitch overnight, where they said that Chinese banks are creating a growing pool of hidden credit risk. That's also got a bit of attention from European participants. Looking forward then in terms of today, pretty light on the ground in terms of actual US economic data, but we will have quadruple witching in terms of US equity markets, so there could be some volatile trade giving the thinner volumes today.